All righty. Well, thanks everyone for being here today. It's nice to see so many people wanting to get information on trading and find some of the answers that I know a lot of people struggle with for a long, long time. I'm no different than anyone here. I can tell you I struggled as a trader for a long time. I've been trading for 27 years, and now over 12 of those, I've been able to support my family, put 2 kids through college, trading full time. And I made all the mistakes. In fact, you would probably, looking back, you would go, wow, that guy was a mess. And I really was. I changed my life completely when I got very simple in my trading. And I'm going to show you some things that it almost seems too simple to be true, but I can show you tons and tons of examples and results to show you that this kind of trading does work. Now, it's not for everyone. Trading itself is not for everyone. And I run the Right Way options service. And I know a lot of you are probably thinking, oh man, options, this is going to be one of those real high risk guys and that kind of thing. People who know me will tell you that I'm probably about the most conservative trader they've ever seen. But I trade options. Now, today's presentation isn't just about options, it's about a pattern that I trade a lot, and it's very effective and it's easy for anyone to learn, and I want to go over that with you today. So feel free to hop in here. I do this 2 hours every day for Right Way options. I do 2 hours of live education every day, so I'm very used to people having a question, and I will try to catch them as quickly as I can. Okay, can't promise you. I'm not exactly sure how many people are here, but I'll do my best. Is there anyone here that's never heard of hit and run candlesticks or Right Way options? Folks that have just never heard of this before. Okay. Hey, that's great. No, it's great running into people that have never heard of us. We are very dedicated to education. There's no hype in our service. We don't hype option things. We teach people how to trade. And that's really what I love to do the most, because I came from where you came from. I came from a very tiny account, struggling, thinking, wanting to give up over and over and over, thinking I'm never going to make this work, and getting stung by all the different products out there that promise you these riches and never seem to perform. And it was actually one day when I was sitting in front of my computer getting ready to just delete everything off my machine. I was going to quit. I was done, when I had some aha moments. And from there, built this trading career that, I got to tell you guys, this is the greatest thing in the world, to be able to get up, walk across the hallway, sit down and go to work. It's just absolutely awesome. And I wish that for everyone. So let's get started here. I want to talk about this pattern. And so the goals of this presentation, I'm going to give you everything I got on this, okay? And in fact, stick around to the end, because I've got this really cool thing I'm going to give away for you guys, and hopefully you'll find it useful. So what we're going to do is we're going to spend a little time. I want to help you to identify this pop out of the box pattern. We're going to talk about low risk entries, exits, setting stops. We're going to talk about a simple scan to help narrow the field. I'm sure there's a lot of folks in here that just feel almost exhausted by the end of the day because you're trying to find a trade, right? You're always rushing to find a trade. Well, I'm going to show you a way how you can actually make the trade come to you. You don't have to chase the trades. They actually come to you. So we're going to go over the way I do that. And I know for some of you, you're going to think, oh my gosh, this just sounds too easy to be true. It's too simple to be true. But if you look at your charts, you'll find this is accurate. You'll find that it's so simple to trade this way that some people will reject it out of hand because just like I could give you hour-long seminars on every indicator out there. I can write indicators. I can write special code for them. I patted myself on the back for years for knowing everything there was to know about indicators. But guess what? If I looked at my account, it proved that it didn't work. My account was not growing. All of those things that I was told that I had to have and had to do and had to have this and had needed this and needed that, my account was not growing. And so I started clearing the decks. And this pattern is one of the patterns that came out of that I want to show you about. And I'm going to give you the trading rules and everything. So what is this pattern? Well, the benefit of this pattern right off the bat is that the pattern is very slow to develop. Okay, it requires no rushing. Okay, we want trades to come to us. We want to have time to identify them. Everyone tells you, right, you need to plan a trade. But when you're rushing around, it seems almost impossible to plan a trade. I can actually plan my trades ahead of time. I can see them coming. I'm waiting for them to trigger. And we'll talk about that. So how to find low risk entries. Trading a plan that's built right into the pattern. This plan is your trading plan, your entry, your exit, everything, your risk is all set up right within the pattern itself. And it takes advantage of some really explosive price momentum moves. Okay, and it happens in the market all the time. They're occurring almost every day in the market. It's not like one of those patterns that you almost never see. You see them all the time. And one of the things that's great about this is it requires you to only have basic charting skills and little to no use of indicators. I know that sounds, if you've been around trading for very long, it sounds like that's got to be far-fetched, but believe me, it's true, and I'll show you in some charts. And in fact, this presentation is wordy as this screen is here. Most of these slides are actual charts, okay? I'm a chart guy, and I see everything visually, and so we're going to spend a lot of time with charts. So, whoops, I went too far. There we go. Let that screen come up. I don't know how long it takes to transfer that screen. Are you guys seeing a new chart? There it is. Okay, it's taking just a little bit to transfer. That's okay. I'll make sure and pay attention to that. So here's just, I wanted to start off the presentation with some actual results, actual trades. Okay, and here's the pattern. And here was an entry into this trade. Now, $8 share gain. I used the January 185 calls on this trade. And you can see I never took heat on this trade. This was my exit candle. This was my entry. This is a daily chart. I never look at intraday charts to trade these. Notice on this chart that there are no indicators. 99.9% of all of my trades are made with not a single indicator. I'm just following price action, and I'll show you how to do this, but that's just one result. Here's a simple trade in Momo. I'm showing multiple trades. Here's a short trade. There's a 12% move. 17% if you traded it here on this breakout to here. 13% if you traded it out of the pattern here to here. If you held this trade all the way through and just managed this trend, this would have been more than an 80% return simply buying the stock, not an option, just buying the stock. Here's a trade in Weight Watchers, and looking at the pattern here here's a breakdown. That was a 16% return, and I measured this out for a couple different returns here on the stock itself in that trade. I can show you a little bit later, but I actually have a slide, and everyone in Right Way Options saw me close this trade. I closed the Weight Watchers trade for 333% return. And it was nothing more than a single contract trade traded off of this pattern. Yep, naked charts. Naked charts. So what do you need to trade this pattern? Well, it's really pretty simple. You need an uncluttered chart. You need a chart that's very clean and easy to read. And I highly recommend white background charts with black and white candles. If you look into the science of your eyes, you will find out that human beings have more, they call them rods in your eyes. We have far more receptors for black and white than we do multiple colors. Patterns stand out for us with black and white candles, and I'll show you that in my charts. Very simple and very clean. Doesn't require an awful lot of effort. You need to have a basic understanding of support and resistance. Now, I'm a big believer in price action. I believe price action is king, and I'll talk about that as we go along. But one of the hardest things about this pattern is the patience to wait. The patience to wait for a trade to come to you. We're all very impatient people nowadays in the trading world. We want something instantaneously. Trust me on this, you can have more trades than you can possibly have money for. But if you wait for the right trades, you'll have a higher winning percentage waiting for them to come to you. I want to talk to you about building a qualified watch list. How to build that list, what you want to do. As a matter of fact, I'm even going to give away a scan that I use every day that helps me build that watch list with the code to do the, put the scan together. I use TC2000 charts, and trust me, it's an easy scan, but you can convert it to any charting system out there. You need a trading plan and discipline to follow it. This is something we talk a lot about in Right Way Options, is the discipline of trading. The discipline, remember, trading is a business, and we as traders need to treat it as such. We need to have a schedule of activities, the things that we do every day. We need to hold ourselves accountable to our trading. And having that trading plan does that. It removes that emotion and puts you in control of your trading. And I know everybody gives out lip service, but we talk about it all the time in Hit and Run Candlesticks and Right Way Options. And as a matter of fact, we created software to help people put that plan together. We call it TC2000, excuse me, not TC2, Trader Vision 2020. We're in the process of version 2 right now, so we're not actually selling it. But so I'm not trying to sell you anything. Whether you use a piece of software or not, you need to have a plan. And planning is the only way I know to straighten out a losing trader. To get you on track, you've got to have a plan and maintain it with discipline. And it's just like any other business. Every business out there has a business plan. Every business knows exactly what's working for them and what's not. You can walk into any grocery store, you could walk into any Walmart and point to an item on the shelf, and I guarantee you they will have stats at how that sells, if it sells better on this shelf or the shelf above or the shelf below. They have that detail. They know what works and what doesn't. And the same is true of a trader. We have to figure out what works for us and what doesn't. And we need to start eliminating those things that don't work for us, okay? And then we only use a few simple indicators, and I put maybe on there because I pretty much don't use any indicators in my trading. Now, some simple rules, and I'll go through these really, really quick. Write these down if you can. Not everyone has a simple set of rules to start with. So first thing, always trade in the direction of the overall market. I find a lot of people waste a lot of time chasing around trying to pick bottoms, trying to trade against the market, doing all kinds of things rather than just following the market direction that's already in place. And so I always have this rule that I will trade with the direction of the market. I don't try to fight the trend. I do a lot of trade coaching, and I was talking with a gentleman yesterday. There's an old saying, a rising tide raises all ships. Well, have you ever tried to fight that tide? Have you ever tried to stop the tide from coming in? Well, clearly we can't do that. And we're not big enough to stop any trend in the market either as retail traders. We don't have that power or that ability. And us fighting it is just about as foolhardy as standing out there on the beach trying to stop the tide from coming in. We can't do it. So just trade with the direction. Make it easy on yourself. Stop fighting that trade. So only trade stocks that are moving in the overall direction of the market. Buy stocks that are at or near price support. And this ... here, right here, I put that in after the fact because one of the mistakes I made a lot was I tried to predict when a stock would turn. Well, it's close to price support, and I try to pick that. And I found in my trading results that I was losing some trades that I didn't have to lose. Losing on some trades that I didn't have to lose if all I did was wait for the buy signal. Wait for the proof that buyers are stepping in, and we'll talk about that as we go along. Sell stocks that are at or near price support, resistance. Take profits, scale out. Never enter a trade without an exit plan. Always know the exact dollars at risk that you're putting into a trade. From your entry to your stop, know the exact dollars, acknowledge it, and accept it. If you cannot acknowledge it, if you cannot accept it, that is not your trade. Don't take it. And make sure your potential reward is greater than your risk. I find this all the time when I'm working with coaching clients that they entered a trade that had less potential of profit than what they took in risk on the trade. And it's a common mistake, and it's one that'll cost you a lot of heartache. So these simple rules, I don't trade a single trade unless if a single one of these is broken, I don't make a trade. And that's one of the things that's different about what you're going to find with Rick Sadler. He runs the Hit Run Candlesticks room, and I run Right Way Options. We're actually trading. I share every trade I make with my members. Stocks, options, everything. I share every single trade. I don't hide anything because I'm actually in there trading for a living. And it makes no difference to me if it's a stock or an option or whatever the setup is. That's what we talk about. That's what we share. So the pop out of the box strategy, it's the stock. Number one, stock needs to be in a trend. We'll talk about that. It requires a minimum of 4 days in a tight price consolidation or tight price action. Price is bound by an upper range at resistance and a lower range, but there's no buyers up there at that upper range, and there's no sellers below that lower range. The tighter the range, the better, and the longer the price is bound in that tight range, the better it is as well. Okay, because energy gets built up within that tight consolidation, and it's going to pop one way or another. We don't know which way it's going to go. We don't even want to try and predict which way it's going to go. We want to wait for it to occur and then follow it. So you're going to be looking for candles that are spinning tops and dojis, small wicks and tails. The best patterns have less than about 3% in price range from the high to the low. Very, very tight price range. And they're well organized in their price action. Stocks that are respecting support, resistance, and trend. What I call deliberate price action. You can see, you can read what's going on in the chart. And there's a lot more charts out there than you might believe that have that pattern. So here's a look at the pattern, and we're going to go through this in a bunch of charts, but very, very simple in this pattern is we have this really tight consolidation right here. Stock moved up, very tight consolidation, and I call it the pop out of the box because I buy it on the pop out of the box. That's my entry. My stop loss into the trade is just below that entry. So just below that box is my stop loss. I have a very low risk trade when I put this on. And I don't take heat on these trades very often. They almost always move in the direction that they pop out of. Now, we do have choppy markets and things that do occur where you get pullbacks, and I'll even show you some failures in some of these charts. But here's another one. You can see the length of time that this was stuck in this tight range made this move have a greater amplitude. It had more momentum. It exploded up out of here. It might be because I'm speaking too loudly. Sorry, Michael. I'll try to sit back. I get kind of cranked up when I start talking about the market. So if I blow you out, please let me know. So we're looking for those really tight areas where we can draw a nice tight box around it, and we're waiting for that break. So an entry here or an entry here wouldn't have mattered. The stop losses were not triggered, and off we go on that trade. Now, they tend to show up in charts that are very well organized and in nice trends. Here's a chart of Adobe, and this isn't all that old of a chart. You can see this is May of this year, okay, over on this side of the chart. And you can see how this chart had a simple breakout of this resistance level, put in this nice tight consolidation, and look how many times it did it on the way up. One trade without pressure to the trade. Enter on the break of the box, follow it up. Enter on the break of the box, follow it up. Enter on the break of the box, all the way up in this trend. Well, Roberto, I see, you're asking a question about a trend. If they're in a consolidation, they're not in a trend. I dare you to tell me that this is not a trend. Yeah, they're so simple to see. And that is if you clean up a chart. If you have a chart full of indicators, you'll never find it. And I'll show you that. So yeah, when a candle, I will actually, and if the market is really strong, Dan, if the market is really strong, I will actually place an order to buy the stock if it pops out of that prior to the market opening, sometimes days before, because I can plan my stop loss. I know the risk I'm taking in the trade, and I just wait for the trend to carry this stock on higher. And I'll show you that this is very, very common. But what's important in this chart is to make sure that you're looking at charts. Notice this chart isn't full of candles that have great big long wicks and tails. The price action is deliberate. It's respecting price support. It's respecting trend. It's respecting resistance. And it's moving systematically. It's just moving up in a deliberate pattern, okay? It's just deliberately moving up. Kevin, it's the break of the box. It's the break of that price resistance right there. Notice that in this chart, I marked out 1, 2, 3, 4, 5, 6 of these. None of these were losing trades. Every single one was positive. If you could have been a swing trader for this and swing every one of these, you could have bought one and held. Exit the trade. Exit the trade. We'll talk about exits here in just a little bit on some of the things you want to do to exit a position, okay? Because that's a really important part of the trade management. Now here's a weekly chart. If you guys like longer trades, if you want to be a little bit more investing rather than swing trading, Here they are. They're showing up very clearly in this Visa chart. Here's several months in one trade, or trades that last even more than a year, just following that same pattern in a stock that's trending, and the price action is consistent and deliberate, following the trade. Now, here's one I wanted to point out. Patterns fail, right? Here's one that popped out of the top of the box, would have been an entry signal that stopped out. Well, after this many trades up, I'm going to forgive one. This one worked to the upside. I call this a pop out of the box down. That's just as easy to trade, a short trade, to the downside, right out of the same pattern. So one failed trade here in this pattern, in this chart, over 2 years. So what we're going to do is we want to build a watch list of qualified stocks. Michael, the box is defined. The box is defined by the price action. If you remember at the beginning of the presentation, I require a minimum of 4 days, in a tight consolidation of less than 3% range. That's for the best pattern. Okay, so a minimum of 4 days. So you can see, obviously, this one qualifies. There's 5 days inside this tight range right here. Here, there's 4 days inside that tight range. Here, there's a couple weeks inside that tight range. So all I'm looking for is that very tight range of price. Where, imagine the bottom of this box here. If you were to take a look at this box, do you see any sellers here underneath that box? See, there's no sellers under there, right? Sorry, I kicked something on and I accidentally, so it's in your window. It'll be out of there in just a second. There's no sellers. If there's proof that there's no sellers under here, you can see buyers supporting this, and we get a nice bullish candle out of here. Isn't that a clue it wants to go up? No sellers. And that's one of the reasons we want to look for these in trending charts. Yeah, Visa is still a very good chart right now. Yes, this is a weekly right here. Like I said, if you like a little bit longer term trades, this works just as well for a long-term trade. So I showed you a short term. Here's a daily chart. And I'll even show you some intraday charts, okay? They work just as well on intraday charts. I do this in front of my members in Right Way Options. I will take a chart, trade it on a 5-minute using no indicators whatsoever, and I've yet to lose in front of them making money on a trade. I mean, in a trade. They have all been winners. Now, I will have a loser, I guarantee you that. But the reason is because I'm really picky on my trades. You see, successful trading doesn't have anything to do with being right. It has everything to do with being disciplined to your trade. So if you stay disciplined to your trade and to your pattern, and you're picky about your entries, not just chasing around anything, being very picky on your entries, your results will go up. Your odds in your trading will go up. Okay, so there was a daily chart for the same pattern. Here's a weekly chart in this pattern, and it's the same pattern. And it'll be the same on a short-term chart. We'll show it to you here in a second. So building a qualified watch list, and this is what I do. I know people, I used to, at the end of the trading day, be just almost completely exhausted, just absolutely worn out. And the reason I was worn out is because I was constantly rushing, constantly hurrying, constantly chasing, trying to find a trade. Chasing, chasing, chasing. Well, when I quit doing that, when I stopped doing all of that chasing, I settled down in my trading and I built a qualified watch list. Okay. And in that qualified watch list, I'm looking for a very few things. Okay. Very few things. So first, I'm looking for stocks that are suitable for my price range and my account. I find a lot of folks that I work with are chasing around stocks that don't even fit their account. And what I mean by that, they're trading stocks that are too big for their account. They're taking too much risk in a trade, and you don't have to do that. I have a friend in my trading room. He's a local friend, known him for a long time. He's finally just started trading. He started trading with me as his coach. Started trading with me 9 months ago with a $25,000 account. Excuse me, a $20,000 account. As of yesterday, his account is over $27,000. And he's taken $4,000 in profits out to just kind of reward himself. And he's done that since November. And he does it that way because he's very disciplined in his trading. He started that way from the beginning. He doesn't use any, in fact, he doesn't even know how to run a scan. Very simple trading. And he's having that kind of results just being disciplined to a plan. Okay, so we're going to start with that basic scan. We're going to look for only stocks. Why waste any time with a stock that doesn't fit us? So we're only going to look for stocks that fit us. We're going to look for a minimum volume requirement. Everyone has kind of a different minimum for themselves. I often run mine. I want a million shares in volume. I find more stocks than I can possibly trade, even asking for that much volume in my swing trades. I want stocks that are in a current trend. And I want to look for organized price action, deliberate price action that respects that support and resistance and respects trend. Now I'm going to give you the scan on how to do this, okay? So don't worry about it. I'm going to show you how to do that. How does he pick his winners? He gets some of those from me because I call trades in the Right Way Options room. He gets some of them from my friend Rick Sadler, who runs the Hit and Run Candlesticks room. But he finds them himself and he runs them past us or through other members of the trading room. And we work through the trade setup. So he's learned that discipline to follow along those trades. And so, and then he's very disciplined on taking, he's extremely disciplined in taking profits. He's better at that than I am. I use TC2000 for my charting. I also have Thinkorswim for my trading platform, but I rarely use the charts. And the reason is the TC2000 is much more efficient for me. I've been in business all my life. I'm all about efficiency. I became a trader for the lifestyle of the trader, not to sit in front of a computer all day long. So I want to be efficient in my work. I want to have my schedule. I want to know what I'm going to do, and I want to move forward with that. Well, I will share how to do it, and it's real easy to reverse engineer it for TOS. Okay, it's real simple. Okay, so I highly recommend you have one chart dedicated. I'm not telling you you can't use your indicators anymore. Go ahead and use them if you feel like it's necessary for you to have them. But have one chart dedicated solely to price action, white background chart, black and white candles, that you can mark up with support and resistance and trend. I promise you this. If you go through and you mark up a bunch of charts, you will start seeing charts like you've never seen them before. You will start seeing price patterns that you've never seen before. In fact, what you'll probably do is you'll sit back and wonder, how in the world did I miss this before? How did I miss this incredible trend? It's been right in front of me this whole time, and I didn't even see it. And if you get simple in your charting, I promise you, you will see charts in a different way. Put indicators that you feel you need on other charts, okay? Be able to flip back and forth if you need to use those other indicators. Use indicators sparingly. I usually have people, if they have 5 or 6 or so different indicators that they like to use, to spread those out over 2 or 3 different tiled charts. Tile your charts together so that you can look at one set of indicators and another set. All right, if you really need to do that, but keep your charts clean. And I'll show you just in a chart coming up, if you overuse indicators, you'll lose patterns altogether. They'll just disappear. You won't see them. The other thing that I always find is indicators provide an illusion that we can predict the market. And I know there's indicators out there being sold with the idea that you can predict the market with them. And I would ask you this question: how is that working for you? Most people, the proof is right in their account. All of the efforts that they have spent looking for that perfect indicator setup, that group of indicators that gives you the perfect entry, I can save you some time because I spent years looking for it. It doesn't exist. Now, that's not meant to burst your bubble. What it's meant to do is save you from years of struggle, because you can probably look to your own trading account right now and realize that what you believe to be true is not working. You're not getting the results that you want. So it's time to change. It's time to dare to lay down some of that baggage and try something simple. And we'll talk about that. So we're going to let price lead us away. Now here's a stock. Everyone has probably seen this stock, SHOP, S-H-O-P. We traded the heck out of this in hit and run candlesticks and right way options. Beautiful price patterns. You can see the pop out of the box patterns there. The price action is very organized. It's very concise. The range in the pop out of the box they're all very small. We're respecting trend in the trade. And look how simple that was to enter those positions. Not a single loser on that trade, and a very simple low risk entry to get into the trade. So we're looking for those charts, small wicks and tails, deliberate price action, price respects, support, and resistance. Now you can even trade these around earnings events. Now I usually recommend, I avoid earnings like the plague. Okay, I don't gamble, don't want to gamble. I want to trade high probability trades. So I don't gamble around earnings. What I do though is I pay attention to a chart that's moved big on earnings. So here's an example of Activision. Activision moved right here, big pop on earnings gap, and then we had this really nice pullback and tight consolidation. If you look right underneath this box, you can see evidence. There's no sellers under here, right? Nobody wants to sell it. But you can also see evidence nobody wants to buy it above the top of that box. So all we have to do is wait for a decision to be made. Well, I can tell you that Right Way Options bought this candle on the pop of that box. The first day, because of the momentum change, if you're an option trader, the implied volatility drops here. It expands like crazy right here. At the end of the first day, we had more than a 20% win in that trade. And you can see what happened through the rest of the chart. Okay, excellent, easy trade to make. Okay, and it's clearly defining where we have our stop loss when we enter the trade. We can understand our risk to the penny. Okay, So I want you to notice on this chart, even though I've got all these drawings and writing on here, there's no indicators on there. See how clear the price patterns show us how the chart's going to move? It's giving us the clues if we clean up the chart so we can see it. It's very simple. Don't have to chase. Same chart here. Oh, I must have went past and come back. Let's keep moving here. Now here I put on 3 moving averages. Okay, the 34 EMA, exponential moving average, the 8 EMA, and the 3 EMA. And I just wanted you to compare between those 2 charts, the one that's naked, how easy it is to see those patterns. I just flipped back here. Give it a second to load. How easy it is to see and identify those patterns, and how much it clouds those patterns just by putting on 3 moving averages. How we can lose, if I didn't have those boxes drawn around there, you would not even see those price patterns. Now there is some use, and I have this in here because I know a lot of people just couldn't even imagine trading without some moving averages. So I put these on here to show you how to utilize these averages around the pattern. So here you have that really nice tight consolidation. Notice how the 3 EMA breaks away from the 8. That's your entry clue. If you're not, you can't see the price pattern because the averages cover it up, but that's your clue of entry. And it happens every time we break out. The 3 breaks away from the 8, and everything stays above the 34. That gives us the trend, the 34 EMA. So we get that really sharp break away, and it's indicating that right at the top of these boxes. So you can see how much harder it is to identify that with just a simple indicator, and how much easier it is to just look at the naked chart. So here are the moving averages that I will use on a chart from time to time: 34 EMA and 8 EMA and the 3 EMA. And I'm always looking, strength of trend is identified by the 8 EMA. It's above and trending above the 34 EMA. And then the 3 EMA is that quick entry, that quick pop that shows you that entry signal, or confirms that entry signal if you're not wanting to use that naked chart. And for swing trading or longer term weeklies, I will change that 34 EMA to a 17 EMA just to slow it down, get me a little bit tighter on price. The 34 EMA on a weekly chart is obviously a lot of data, and that moving average can be a long ways away from your price action. So to tighten it up, I use a 17. And then I will use a 2 EMA rather than a 3 EMA to give me that quick pop, that break away from the 8. Okay, some more charts here. So you can see I blew this up just a little bit, and you can see how that 3 EMA, whoops, wait until the chart loads, how that 3 EMA breaks or snaps away from the 8. The 8 is that green line, the pink line. I made those complementary colors to be easier to see on the screen. That 3 breaks away, pops out of there, and gives us a really, really nice clean entry on the pop out of the box. Same thing occurs here and here. So that 3 is confirming or giving you that short-term quick signal that we've broken that consolidation and we're ready to move up, and we're staying within our trend. Same thing here. Wait for that to load. On a pop out of the box down, we have a chart pattern where we get that nice tight consolidation right here, and that breaks the bottom of the box. breaks down out of the bottom of the box. And you'll see that 3 crosses down over the 8, confirming that signal. Okay, so we cross down. Here, we stabilize, cross back up for that nice clean entry into that trade. And no pressure on the trade when you take them. It's a good question, Emmanuel. A lot of times, I base that on what the market itself is doing. If I have a lot of confidence in the market, if the market's been bullish, it's trending well, and I have some confidence that we're going higher, I will buy those normally on the pop of the box itself. As soon as the price crosses over it, I'm in the trade. And the reason I do that, well, I'm comfortable with the trade because my stop loss is very close if I do that. I'm taking very small risk in the trade. But there's nothing wrong with waiting for the next day. You just have to recognize that your stop loss may be further away and plan your trade accordingly. So Joanne, I hope that answered that question for you as well. And we're going to, it's down to that trader's confidence in their trading in that pattern. But remember, anytime we wait too long, we're actually increasing our risk in the trade. And I know it's easy for a lot of people. I did this myself. Okay, I would wait for so much confirmation that the stock was going to go up that I ended up buying the stock almost right at resistance. Anybody ever done this where you just feel like there's got to be somebody watching you on the other side of the screen? Because as soon as you pull the trigger on the trade, the stock pulls back. Anybody ever experience that? It's actually pretty common. Yeah, and what that is it's actually easy to fix. Okay, what that is waiting for so much confirmation that we end up buying the stock at price resistance rather than price support. We've increased our risk on the trade because we bought closer to resistance than support. We've actually lowered the odds on the trade as a result. So I did that a lot myself, and it's the confidence thing where you're not confident in what you're doing. You wait for a bunch of confirmation. You want, half a dozen indicators telling you it's right and everything else. And by the time you make that decision, it's ready to pull back. And we can avoid that with some simple charting. Oh yeah, I'm telling you, I had a complex there for a while. I could have sworn somebody had to be watching me, because I would pull the trigger on that trade and the stock would immediately pull back. And it was like, are you kidding me again? How can this keep occurring? Well, it wasn't. I would blame everybody else too. Blame everybody else except me. Until I finally recognized what I was doing, that I was not paying attention to where I was in my price action, and I was actually buying at the most logical place that the stock would pull back. So it's very, very common. I want you to know, if you've experienced that, you're in a good group of people, because most traders have felt that one time or another. So the great thing about this pattern is you can see you don't have to rush, because we can actually see this pattern developing, right? So if we build a qualified watch list, and that qualified watch list is that list that's going to be trending stocks only, stocks that we can see those price patterns developing, and we wait for the trade to come to us. So there's no rushing. You don't have to rush to any trade. I have a schedule of things I do. I flip through my lists 3 times a day. I don't chase what's on the news. In fact, I haven't turned on CNBC for years. Don't care what they have to say. In fact, it harms me every time I listen to it. I don't listen to any of that stuff. I make all of my own trade decisions based on those simple charts. And I don't have to rush. I became a trader for the trader's lifestyle. I didn't become a trader to be strapped to a machine, you know, trying to sort out 14 different data inputs and all that. That's not why I became a trader. And I'm sure most of you probably can feel that as well. You didn't become a trader for those reasons. So we need to find a way to simplify it. Okay. And this is just one of those steps to simplify it. I think I'm going to have to speed up here. So you wait for the trade to come to you. What I will often do is I'll see that trade developing and I'll actually place a price alert on my chart, draw a line, place a price alert on the chart and say, if it pops out of there, let me know. Now, if I'm really confident about the market, sometimes I'll just enter order. If it pops out of there, buy it. But most of the time I'm using an alert. It alerts me when that pop happens. I look at that, my trade is already prepared. I'm ready to trade it. I send the order off and I'm done. Okay. And you already have your plans repaired. The overall, you know, you're looking at overall market. It's strong. You can use conditional orders, and I use those conditional orders all the time. If the stock crosses above X price, enter the trade. Because and my stop loss gets dropped in immediately after, because I know where my risk is. That's awesome, Kevin. I know it can work. The folks in Right Way Options, Hit and Run Candlesticks have had tremendous results with this. And I'm going to show you some results here in a little bit, not to hype it, but to show you what's possible in some very simple trading. Okay. Here's a chart, MASI. Look at these great pop out of the box. The length of time. You can place these orders and let the conditional order trigger you into the trade. No emotion, no chasing, no rushing. The trade literally comes to you. Either it works or it doesn't. Either it pops out or it doesn't. We don't care if it doesn't. We don't try to make something out of a chart pattern that's not there. If it doesn't work, we move on. We find another trade that stays within its trend and stays in that nice, consistent, deliberate type movement. Okay? So conditional orders are a great way to do that. Now, someone asked me earlier about taking profits. And this is something I deal with all the time when I'm working with people and a trading coach is we allow, it happens to all of us, we allow greed to prevent us from taking profits, right? We get in a nice trade. We haven't seen a nice trade for a while and it's moving up and it's looking good. And we close the market that day thinking we're kings of the world. We finally got this figured out, right? And the next morning you turn on your computer, the stock gap's down on you, most of your profit's gone, and you're going, what in the heck just happened? Okay. Well, I'm a real big believer of selling into strength, and my members see me do this all the time. While the stock is still moving up, I'm looking for places where it could potentially reverse. I'm not talking about waiting for it to reverse. The stock is still moving up, and I'm taking profits. So I generally scale out of a trade. If I'm in multiple contracts with an option trade or multiple shares, I scale out. I take profits consistently. Okay, and one of the bonuses that I'm going to give you is an email, a YouTube series that I've recorded on consistently profiting and how important it is to be consistent in your gains, consistently profit. If you ever want to make it to being a full-time trader, obviously we have so much we have to cover every month, right? Your bills are so big. You got this much to cover. So you have to consistently make that money. Well, to do that, you've got to get consistent in your trading, consistently taking profits. Okay. And I do that by selling into strength. Okay. And scaling out of position. I take very close attention to price resistance. If a stock has been moving up, but it's still under price resistance, and I don't care if that resistance is 5 years ago, I pay attention to that level, and when I'm nearing it, I'm usually going to be taking some of the profits out because that could be a reversal point. So I'm going to scale out as we move up into risk, always taking profits. If a stock gaps up, we use a phrase in hit and run candlesticks and right way options all the time, that gaps are gifts. If you're in a trade and the stock gaps up, take some profit. Don't let them take it back. Take some profit. So I'm always selling gaps as well if I happen to catch one that gaps up. Here's a great trade in J&J, a little pop out of the box pattern here. This is another thing that's really fun about this pattern is it occurs in even these old stodgy companies. They don't have to be the big newsy companies. Happen in these old stodgy companies that have really, really cheap options. Really easy to trades. And this popped out of the box. It got the alert in the trade. Well, here's a resistance point. Price could stop right here, right? I can see that coming. And so what I do is I take part of the position off as we move up to that area. I take profits. I leave the remainder of the position on. It moves up, hits another level. And here's the other thing. I don't care if I have to take 75% of the position off to make the goal of my trade. I take 75% of the position off. Whatever I have to do to make my goal on that trade, I will take that out. Anything else is a freebie because if I've taken money out of the trade already, I can relax a little bit, can't I? I can just chill out a little bit because I've already put money in the bank. Now I can let the stock wiggle around a little bit more. I don't have to be laser focused on it. I can relax. I can let the chart work. I can let the trend work for me. And so stock moves on up, triggers me out at that resistance level. Past that, there was blue sky up here, and J&J moved on up. So you can scale out anytime up into here. Now, I usually scale out in 1, 2, or 3 scale out trades. So the third position that I'm in, I will sometimes just let the stop take me out. I'm going to share those with you, Kaz. In fact, you will have them I'll show you here at the end. You're going to get this really, I think it's a cool bonus. So gaps are gifts. We've traded the heck out of BABA. One of my members in the room has taken this whole idea of following a trend and trading a trending stock to the extreme. His name is Bob C. I'll just leave it at that's what he goes by in our trading room. He on BABA alone this year, just this year, since January 1, BABA alone, he has taken $60,000 in profits out of BABA alone, just following a very simple system that we follow and taking very low risk trades. He's taken $60,000 out of BABA this year. No joke, he'll tell you about it. He'll even show you the trades. Absolutely knocking it dead here, just following one chart. He doesn't have to trade every chart out there. He's got to trade one trending chart successfully. He's had very few losers. I mean, bunches of trades and very few losers. So we get a gap in a trade like this. Here's a pop out of the box that we traded. Popped out of the box, stock gapped up. We took some of that trade off, put some money in the account. So we're always working to take profits and doing that on a consistent basis. Here's a trade in Amgen we did. This was an earnings gapped up here on earnings, and then this nice tight consolidation formed. We bought this candle. Well, you can imagine we bought this with options, what kind of a return we had here. Phenomenal. If you'd have bought this with the stock, you'd have been dancing on your desk. Simple trade, low risk entry, easy to spot and identify. The trade actually came to us. Here's another earnings gap. I showed this one once before on Activision. Activision gapping up, nice little tight consolidation, popping out, moving on up. Easy trade to make. Now I'm showing it here on this chart with the moving averages on it. And I'm doing that for the purposes of showing you the importance of overbought and oversold. Okay, a lot of times we get into a trade and we let greed get the better of us and we want to just stay with the trade forever, that kind of thing. And you can see when the 3 pulls far away from the 8, when you get those big explosive moves like that, we're almost always going to get a pullback or consolidation. So when most people see this gap, they look at it and go, well, the trade's over, I missed it. And they quit looking at the chart. These are all, mostly what I'm showing you is daily charts here, Robert. I will show you an intraday chart. I do have a couple of weeklies in this presentation, but so, and you can see down here, this is the date. This is January here, and this is clear over to March. So you can see this was in this consolidation for better than 2 weeks of trading time. When this popped out. But what happens is that 3 EMA pulls away from the 8 and we get that big separation between the two, and we're almost always going to get that pullback or consolidation or rest. Well, what happens is people see this gap, they walk away from the chart, they never look at it again, and that's actually when I put it in my list and start watching it. Because as long as it doesn't break all the way back down, it's probably going to set itself up. This is a big kick in one direction, right? This is a change of attitude here. Hey, Donna, we've all done that. I mean, you know, we quit looking at them because we think, oh, it's already passed, doggone it, I missed it, and we quit looking at them. Well, we just wait for the trade to come to us. The stock pulls back, rests, and then bang, there's the trade. So the big attitude change was here. That signifies all of a sudden something's changed in this chart. I want to start paying attention to it. I only throw it out if it fails and just trails all the way back down. We've all seen those too. Then it's out of there. I'm done looking at it. But I want to make sure that when we get kicked in one direction like that really strongly, to just wait and watch for the next entry because something has changed. Now I hear this thing a lot from people. Well, it's gone up so long. It's gone up so long. How can you be sure it's going to keep going up? I'm never sure. You will never be sure. There's no indicator in the market. There's nothing in the market that's going to give you 100% assurance that a trend is going to stop. But if you're in a trend, you're putting the probabilities in your favor. Not always, Patricia, not always, particularly in this market. If you've noticed, our markets are kind of anymore, I would say back in the day, that was a lot more true than it is now. We're kind of an all or nothing market. Either the stock is working or it's not. And we're not filling gaps. We've had 2 gaps in the diamonds here over the last 3 days. Neither one have been filled at this point. So just watch. I mean, it'll tell you if it's going to fill the gap. I mean, won't it? You know, all we got to do is watch for it. If it doesn't fill the gap, wouldn't that tell you strength is here? It's giving us a clue. And we follow through with that trade. Okay, so I'm going to throw this in. It's an indicator that I show a lot in our trading room. It's called volatility stop indicator on TC2000. I actually am going to give you the code on how to put this into Thinkorswim charts and how to set it up. But It's a really simple indicator. When you look at it, you're going to think it's a parabolic SAR. It is not parabolic SAR. It's a average true range calculation, and I give you the settings. But it's a really great tool if you don't have a lot of strength in seeing support and resistance. It's a great tool for helping you find that trade or find those low risk entries, find that support, find that resistance, and prevent yourself from entering trades that you shouldn't be entering when you're buying right at resistance. So it helps you identify that. It helps warn you if you're chasing, if you're buying at resistance. Helps you identify possible pullback entries as they're forming, as they're coming. And it works on any time frame, and it will help you gain a lot of confidence in what you're seeing in a chart. So here it is, and I've got a few charts on this, but one of the bonus that I'm going to give you at the end is a book, an ebook that I wrote on this indicator, plus a YouTube series of videos, and we'll talk about that in a second on how to use this indicator effectively. It's very, very simple indicator. So you can see red, I've got mine set up as red and green. Green would set up and saying this is my support. Red says this is price resistance. And you can see price resistance was right there. We couldn't get through. That was price resistance. Well, we finally popped through and this turned to green. So it's showing me price support. It also made a pop out of the box pattern. So there's my entry. And I use this to help teach people how to set stops correctly. So each one of these dots is developed over the course of the day. The day isn't finished, and the dot is not finished until the day is finished. Okay? Now, the rule we use in hit run candlesticks and right way options is we set our stop loss just below the dot that has already closed. So if this is my entry, my dot is clear up here. Okay? My stop loss is down here initially. That's my initial stop loss. At the close of the day, I can move my stop loss up to here. Or the close of any trading period. If you're trading a 5-minute chart, these are 5-minute candles, just follow it the same way. And just follow the trend. Now look at this, how easy this was. Entering this trade here on this pop out of the box, adjusting your stop loss at the end of every day, you would have traded this all the way to here. You would have been in that trade for more than a month and a tremendous return on the trade, doing nothing but entering the trade correctly with a low risk entry, and then following the trade with a properly placed stop. We do have a trial to the room, and I will give you that information here in just a little bit. So low risk entries. Here's a real simple trade, little tiny stock, UAN, okay? You can go back and look at it. This was December 2016. So you can see we had the volatility stop here was red. We were still downtrending here. And then suddenly we get this reversal, okay? I ended up buying this trade. I didn't enter this position until I was clear up here. And the reason is I was letting this move through these motions, and if you had enough chart, you'd be able to see there's an inverted head and shoulders pattern in here. Well, here's an entry into the trade. So all we're doing is we're allowing the stock to move. We don't chase it here. We let it pull back, give us a low risk entry where our stop loss is close. Let's follow the trade up. You can see it did it over and over again. Peak and valley patterns are going to do that. If you have a nice trend, if you drew a trend line up here, you can see a beautiful uptrend off of those lows, and we were just buying the low risk entry into that trade, okay? It works the same way going down. The stock rolled over. We went from green to red. If you like shorting, you wait for this to flip over to red and wait for the rally back close to the stop. So we had a pop out of the box down here. There was the trade down, an easy short, another one here. You could have stayed with this short trade all the way down, just moving your stop loss on a daily basis. Okay. Well, I've studied Elliott wave theory, tested on Elliott wave theory, and I can tell you, John, that you put 2 Elliott wave traders in the same room, you put 10 Elliott wave traders in the same room, and they'll give you a different opinion, each one of them on the chart. I'm following price. No theory, no nothing. I'm following price and price only. I'm only showing you this volatility stop indicator as a method of helping you see support and helping you place stops correctly if you're struggling as a trader and need help with that. So I got to speed up here a lot. I'm running out of time. Adobe here, you can see that same trade in Adobe. Picking any one of those trades, this stop would have kept you in this trade all the way to here. Very easy to follow. You guys want to have your trading life back. You want to be able to go out and see the grandkids and visit family and do the things you want to do instead of being stuck in front of a computer all the time. There it is. Jose, I've answered that several times. Most of the time, I buy it when it pops out of the box, not how far above. I buy it when it pops out of the box. That puts me as close as possible to my stop loss, the lowest risk entry I can get. Here's a trade in AAOI. Oh, absolutely. Absolutely. AAOI popping out of the box right here. There's the trade following the chart. Volatility stop kept you in the trade all the way up to here. Set your stop at the end of the day. Let the trade work. Here's another one. Just over and over and over, I can show you these charts. Pop out of the box patterns, performing easy entry trades, low risk, and now you have a method of running the stops as well. It even works in down markets. In fact, it's great for shorting. Let that chart catch up. Beautiful downtrend here. Pop out of the box down to enter that trade. Just follow it down with the stop. Look at the tremendous move you could have made with that trade. Now, again, it doesn't matter if you're doing it on a daily, a weekly, an intraday. This is that tier chart. Here, I'm going to go back one. I'm going to take a little bit longer than my time, if you don't mind. Here's a 3-day chart. 3-day chart. It works just perfectly on a 2-day or 3-day chart. It works great on a daily chart. AAOI here is a daily chart. No problems with that. It works just as good on daily charts. If you like longer term charts, it'll work for a longer term chart, okay? Here's a 5-minute chart as soon as it loads over there. Here's a 5-minute chart of the Qs. This was an actual trade I did in the trading room. While everyone was watching, pop out of the box pattern showed up right here. I entered that trade, followed it with a stop. Intraday trade works just exactly the same way as any other pattern. I mean, as any other trade. It just follow it up, follow the rules. It's that simple. Weekly charts works great on weekly charts. If you like doing a little bit more of longer term investing type things, it works great for that. Just simple rolling up of those trades. Pop out of the box. So here's a few trades. I just grabbed several of them. Some are the charts that you've seen, some of them aren't. Some are stock trades, some are option trades, the kind of profits that you can make. Now, I want you to know that when I trade, I don't risk any more than 3% of my account into any one trade. and not 3% to my stop, 3% of my account in the size of the trade. I trade conservatively. I keep my trades small, and I spread my money around the market. I never take huge risk. Okay, and so you can see these trades, if they're bigger, you know, price stocks, you're going to find that I'm mostly going to be buying the options on it. If it's a lower price stock, I'll be buying the stock itself. But you can see the kind of gains that are possible. And we do this all the time. We just closed one in right way options last week on Microsoft for a 95% return. Okay. So, social media, really quickly. You guys can follow me. I don't have enough time to explain every single piece of this. You can follow me on Facebook, Twitter, YouTube. Of course, contact me, hitandruncandlesticks.com. Now, what we're going to do, what I'm doing is I wrote it's not a huge book, it's a small ebook. It's called Strategy for Consistent Profits. And it's really covering that volatility stop indicator. But in that book, I give you, here's that link. It's a terrible link, hard to remember. I think he's going to post it over there in the chat. That link right there will get you the download of this book. Okay, we'll get you the download of this book. And in the book, you're going to get this. There'll be another link in that book that's going to give you a PDF on how to set up the volatility stop on the TC2000 chart. So you get the book on how to use the volatility stop. You get a PDF on how to set it up on TC2000. You also get a PDF on how to set it up with the code necessary to set it up for the TOS charts, Thinkorswim charts. Okay, you can feel free to reverse engineer it anyway. Also in the book, you're going to get a full explanation of building that qualified stock scan and my scan criteria, the actual code that I use for the scan criteria. Okay, I will put that up here in just a second, guys. I'll put that back up. Okay, put that back up. Give me just a second. There's that link. Okay, now just for coming today, we have hit run candlesticks and right way options. We do a trial for our trading rooms. Now let me explain our trading rooms here for just a second. Hit run candlesticks is open all day long. It's run most of the time by Rick Sadler. There's a few of us that pitch hit for moderating at different times of the week and things for that room. It's usually open and starts getting very active about 2 hours prior to the market open. People in there discussing charts, discussing things. At an hour prior to the market open, one of our members, Steve Risner is his name, he comes on and he does he's more of a futures trader. He does kind of a look at the futures on the market, talks about the market setup, gets you kind of prepared for the market. Rick comes on at about 10 after 8 in the morning Central Time. It's 10 after 9 Eastern Time, and he does a chart show, and he goes through, he usually has one featured trade every day that's already planned. He gives it out every single day. And you can have, he does that every single day. Now, you can also get that information free. We have a phone app available. If you go onto iTunes or You Google Play Store, look up HRC Trading, HRC Trading, Hit and Run Candlesticks Trading, and our app will be there. You can download that app. You can access his free picks every day from the app. If you decide that you would like to give us a try, we'll give you a full free month, and we're talking full access. You have access to everything. We don't restrict a thing. We do it for $14. Now, we wish we could do it for free. Our room is pretty popular, okay? And we actually had, I'll tell you the story of why we went to $14. We actually had people changing their email addresses and changing their name by one letter so they could continue to get forever free trials. So we had to shut it off. A few people mess it up for everyone else. And so we started charging $14 for our trial, but it's a full month, full access. Rick is, Hit and Run Candlesticks is open, like I say, basically 24/7, gets real active 2 hours before the markets open. We're there all day. On Tuesday evenings, he does an e-learning session every week, every single week. There's always somebody there. HRC Trading, if you're looking for the phone app, the smartphone app, HRC Trading is the phone app. Okay, so you're going to go to hitandruncandlesticks.com. You can see it in the first part of that link on the screen right now. Hit and Run Candlesticks, just put a .com on there. Go there. There is a $14 trial that's available there. And what we're going to do, we will get an email list of the folks that attended. We will send you something as well to offer you that 14-day trial. And we're going to give you a choice. You can do, for $14, you can do the Hit and Run Candlesticks room, or you can do the Right Way Options trading room. Now, Right Way Options is a little bit different because we're trading options. I open up the room live 2 hours every day, and I'm teaching 2 hours every single day. And it doesn't have to be just about options. It's a lot about stocks too. And any question is acceptable. What I do is I share every single trade I make. Stocks, options, everything. You see it, pull the trigger in front of your eyes. A lot of the time we take live trades during that session where there's things popping and happening. We put on live trades at that time. You will participate in that for $14 for the entire month. Take advantage of everything we have, plus all the videos and webinar stuff that we do. I do, like I said, 2 hours every single day. And then twice a month on Saturdays, and this Saturday is one, I'm doing a live class, and I will be broadcasting live to a Dallas group as well. I do e-learning Saturday mornings twice a month for the members. Pop out of the box gets used in both rooms. Can he pop out of the box and the volatility indicator on both rooms gets used there. The hours for Right Way Options is 11 a.m. Eastern Time to 1 p.m. Eastern Time. It's when I'm active and live in the Right Way Options room. Hit and Run Candlesticks is basically open all the time. I don't use the volatility stop to scan for stocks. I use it more to sort my watch list, because remember, I'm building a watch list. I don't do much scanning. I do very little scanning. Scanning is kind of a waste of time. How many of you have spent half of your life trying to build a perfect scan? Still not accomplished that, right? Find the good quality charts and then wait for the trades. Wait for the trades. I build my watch list by that simple, what I said, that core scan that I use. It's a very simple scan, and it's in the ebook, okay? It's in the ebook. How do I pick my stocks? How do I pick my trades? Simply by looking at charts. I look at more charts than probably most people can, would even want to stomach. I enjoy looking at charts. It's not uncommon for me within a day's period of time to look at 1,500 or more charts. So I'm always staying ahead of charts, and I draw them up too. So I'm always placing alerts, and I'm finding ways to enter them. Okay, so when I find a quality chart, I'm usually tracking it very, very closely. I look at it a minimum 3 times a day as I flip through my watch list. Remember, I trade 99% of my trades from my watch list, not from scans. I make the trades come to me. I'm not chasing them. It's a big flip of the switch here, guys. It's a complete change of attitude. Make the trade, make the stock earn your money rather than chasing the stock. Make it earn your money. Yeah, my email, guys, if you want to email me, you can go to the Hit Run Candlesticks room and leave an email there, or you can email me at doug@rightwayoptions.com. I can get you some scans for TOS. TOS scanning is very cumbersome in comparison to TC2000. But we can get you something that is very, very close or very similar to what I use. And really, my scans are very simple. And again, guys, seriously, I don't do much scanning. I work from my watch list. If you want to free yourself, if you want to free your life up, work from a watch list. And one of the things I do a lot, Bob is saying, do I share my watch list? One of the things I do a lot is I do an email at the close of every market day to all the members. A lot of times I just put a link in there that is a copy of all of my chart alerts. So you can go through and look at my alerts and see what I'm watching. John, do I trade only, or excuse me, Tom, do I trade only breakouts? No, I don't. But I trade very limited patterns. As I said in the beginning, I'm about as conservative trader as you're ever going to find. I'm very, very picky about the trades I take. So 99% of my trades are always going to be either a stock that is already in a trend or a stock that is reversing into a trend. Okay, so I am very picky on the trades I make. I always follow my rules. People will post trades all the time, and I'll detail the chart out for them, but I will tell them directly, that's out of my wheelhouse. I won't trade that. It doesn't fit my rules. Hit and run candlesticks. The hit and run candlesticks room is $75 a month, and it's cheaper if you go semi-annual or annually. And Right Way Options, hit and run candlesticks is $85 a month. Right Way Options is $75 a month. In hit and run candlesticks, Roger, they really don't talk about options at all. It's all about swing trading, stock swing trading, and that's Rick. Rick is a master at swing trading stocks. He has multiple double-digit winners right now in his portfolio, and And he shares every time he pulls the trigger on a trade, he shares the trade. And every day he's putting out a list of trade ideas. So it's the difference is really between the stocks and the options. We focus a lot more on options in right way options than we do just stock. I don't trade delta neutral, Tom. In fact, I've found very few people that actually make, retail traders anyway, that actually make delta neutral work very well for them. We trade, it doesn't matter what it is. We do trade directionally. I can tell you the trade that we just closed the other day in Microsoft for a 95% return was a fig leaf trade, and that is essentially buying a leap option, a long-term option, and then we sold covered calls against it until we finally got called away. I can't remember how many, 5 or 6, 7 months into the trade or something like that, and we finally got called away from the trade. We had the right to buy Microsoft at 57.5. We were called away at 72.5. And we made covered call trades against that trade the whole way up. It's called a fig leaf position. We do those kind of trades. We do short-term directional trades. We do calendars. We do credit spreads. We do, whatever the chart sets up for, that's what we will trade. I run the right way options service, trader. Right way options. And the right way options trading room is open. When I'm in there live is 11 p.m. 11 a.m. Eastern time to 1 p.m. Eastern time. Yeah, Tom, I do quite a little bit at personal coaching, actually. I work with a lot of folks all over the United States. Actually, I had my first customer here recently in Germany. So I even work with folks outside the country. Implied volatility, Don, is very important to me. And also, we have some very strict rules on the options that we trade. We're also very committed to buying the right option, utilizing delta. Implied volatility rank is also very important on every, well, it has to be on every trade you make. So those are all considerations, Don. In our option trades, absolutely. $3K is a little bit light, John. It's possible. I don't want to tell you it's not possible, because it is. But it's going to limit you on the number of trades. Or here's the thing that's going on with the market right now. If you take a look at the market, the best stocks out there right now, the things that are moving are the higher price stocks. And a 3K account is going to it's going to strain you a little bit to trade some of those trades. Okay. I usually tell people that 10,000 is a good number. You'll feel a lot more comfortable around 20. Now, having said that, when I first opened my brokerage account, I started with $2,500. So it can be done, but it requires some effort, and a lot of effort, and it's not, I know you just want to get your account growing, and I get that, I really do. but there's danger in that as well. You've got to be just as disciplined, and with a $3,000 account, you have to be the most disciplined person on the planet, because one mistake can mess up your entire year. Okay, so it can be done, but I just want you to know it's difficult. How many stocks on my watch list? My option trading list, I can tell you exactly where I get my option trading list. Every month I go to the CBOE website. CBOE website has a place where you can look for the options with the highest option volume. Every month I download that list. I take the top 250 stocks from that list. I put them in a watch list and sort that list. All of my option trades pretty much come from that list. Anybody can get it. It's available to anyone. I don't waste time. Remember, I said efficiency is very important to me. I do not waste time on stocks that don't have good quality options. Don't have the time for it. Don't want to. So I use a high quality list from the beginning, and I sort from there. Delta that I buy, if I'm going any directional trade, our rule is the delta needs to be somewhere between 70 and 80 deltas. And I don't have time to really explain why, but that if we're going any directional trade, it's going to be a 70 to 80 delta. So the next question, Hugh, mostly are in the money. At the money and out of the money options is a fool's game if you're playing directionally. Very low probability of wins and very high probability of losses playing that game. So we're always in the money on directional trades. If we're trading spreads, however, those are almost always going to be vertical spreads, by the way. They're almost always going to be out of the money. How do you trade different stocks? Oh, do I trade? Yeah, I do trade different stocks. And the reason is because with options, I have the ability to trade a lot higher price stocks than most people would be comfortable trading with an option. So yeah, we do trade different stocks. I can tell you a lot of people that join one eventually just become members of both. Just search on the CBOE website for high volatility stocks. Just a second. If I can figure out how to post, I'll post you the link. Well, here, I'll just move this window over here so you can see it. There. Well, maybe it's not going to load over there. Hold on. I can read all the chat, but I don't know how to post the chat. Well, here, let me read it to you. It is cboe.com/historical-options-data/equity options volume. Hey, thank you, Emmanuel. I appreciate it. You can download that list, and you never have to waste your time looking at a stock that doesn't have good quality options. Let's see. How about a scan for those options at your price range that have low implied volatility, looking for a box? Bob, what I'm going to be doing in anything, I'm not going to be scanning for options. I'm going to be using this high quality list, and I'm going to sort that list by, and in that ebook, you're going to get the code that I use to sort the list in TC2000 that sorts it by only those that are trending. Okay, and those are the charts I look at. I don't scan for options, and then I look at the chart itself. Price action of the chart is the most important thing in any trade. I don't care if it's stock or options. It's the price action of the chart. Don't get hung up on too much of the minutia in some of these other things that a lot of places will sell you on, that's what you need to be focused on. You're not going to make money in a chart unless the chart is moving, unless price is moving. Focus on the price action of the chart and work to follow the price action of the chart. What open interest do you recommend? There's no hard and fast rule on open interest, except for me, low open interest. If I have open interest that is less than, this is my bare minimum, I have to have at least 10 times what I'm planning to trade, personally, what I'm planning to trade for an option in open interest. That would be the very bare minimum, and I never, ever send those out to a group. That would be irresponsible of me to do that. I want much higher open interest. Anything that has really tiny open interest usually has very poor bid-ask spreads. We want efficiency with our money. We're using options for efficiency with our money. Don't give that up in a big bid-ask spread. So focus on those options that only have lots of trading going on. Your bid-ask spreads will be tight. There'll usually be plenty of open interest. Right way options, I usually run win-loss ratio right around 70 to 75 or 6% for win-loss ratio. Rick was showing his, our software that we track that stuff. Rick was showing his the other day in the room, and he's been running about 77% here recently. Win-loss ratio. The indicator is the volatility stop indicator. So there's a PDF in there that shows you how to install it on TC2000, and also the code in another PDF on how to install it and set it up in Thinkorswim. It's in the download from the ebook. Okay, it's in the ebook. It's not in the download of the ebook itself. The link is in the ebook. Yeah, it's in the ebook. Just read through the ebook. There's several links in there, okay? And it'll take you right to it. I didn't want you to be in any kind of a rush to get that data, okay? So it's in the ebook, so you can get it at your leisure. You know, you can, whenever you get to it, you'll have that ebook. And that is the bonus pack. Plus, you go to the follow the links in there, and you'll be able to start the whole video series I have on consistent profits. Dan, could you post that link one more time so that they can click on that link and go directly there? I would appreciate that. I want to say thank you, everyone. Thank you very much. I'm really glad, very happy to help. If there's anything that I can do to help you guys, please feel free to ask. We love questions and hit and run candlesticks, right way options. We love questions, so please feel free to ask. And if you do have trouble with that link, if you're saying you can't get that link, do me a favor, okay? Go to the Hit and Run Candlesticks website. Let us know. There's a place where you can send us a message on the website. Go there, send us a message, and I will make sure you get that link sent to you, okay? Link works good? Okay, good. Thank you, guys. I really do appreciate it. You're great. I look forward to talking with you soon, and hopefully we'll see you around the room. Dan, thank you very much. Thanks for putting on this great event, and I do appreciate it. Everyone have a great day. Take care now.